BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. A bit of a late start today, sorry about that. So let's get straight into it. We'll start with traditional markets, a bit of a Dixie to begin with. So Dixie moving up still. Still not got the golden cross yet on the daily. I think it's inevitable that it will. Obviously the 4 hour did get that with retest of the simple moving average. So looking to me like we do want to continue up on this one with a target of roughly around 105.3, maybe a little wick higher than that. And then probably a rejection from there to, at that point, come down to retest the golden cross, which should have formed on the daily, and that'll be sitting back down at 103. So long as the dollar, or the Dixie should I say, is above 103.3, 103.1, basically above this descending trend line that we broke out from, so long as we're above all of that with the 200 simples and 20 simples, then yeah, we can't really get bearish on it. You close below here though, yeah, we'll probably break down and we'll see dollar probably move back lower than our previous lowest low, where we had a decent move from. If we go back to a weekly, you can see that wasn't just a box that we bounced from. It was a 200 exponential on the weekly, so a really nice retest and a bounce from that. Again, you know, standing back and admiring it for what it is, that is a golden cross retest on a weekly, so on an exponential. But it doesn't mean that we can't come back down lower than that. There's a lot of geopolitical and general economic reasons why we could move further down on this one. If the Fed pauses or continues to pause or inevitably lowers rates at some point, we'll see. But for the moment, it's just meandering around these areas, and I'm not really looking for it to break above 105.5 really. So that's that. We'll have a look at S&P. So S&P bold move yesterday with all markets actually. All markets had a really good move yesterday. But I'm not really sold on the idea of this breaking a new all-time high. We did smash right through that 20 weekly, the 20 daily Bollinger Band Center, so that does look good, and a retest of that at some point, maybe even today or at some point next week, would still be worthy of buying a dip on just to try some kind of futures or derivatives trade on it. But I'm looking at this in a different light really, which is that, you know, I've been thinking that stocks have more or less, maybe not peaked in a massive way, but peaked in ready for a bit more of a consolidation back down towards like 4,100. And if we do focus on just this little aspect I'll show you now, we've got a bit of a head and shoulders forming on your S&P, and if that is the case, then we could have a very crude measured move from the peak to the low for where the breakdown might take place. And if we just think about this just very briefly, if we do think about where we break down to, it would take us down towards 4,100 or thereabouts. Yeah, I'm not like a big believer in measuring these moves to the tick, but I do think that we're about to correct and going to continue correcting. So I'll be very surprised to see a new local high, and especially a new all-time high formed soon. If anything, I think a correction is probably more likely, and then getting picked up somewhere down at these lower zones, whether it's just towards 4,000 or slightly higher. The measured move, like I say, is not something I'd hold too close to my heart, but the moving averages and the horizontals probably more so. So yeah, probably around 4,100, 4,200. So not an enormous drop, but for the S&P, that might seem like chaos to a lot of people. We're talking a move maybe 7 towards maybe 9%. So not a big deal for the S&P, but for individual stocks, yeah, it probably would be. And a lot of it was Nvidia driven, wasn't it? So the AI stocks all coming down, and Tesla felt that too. And Tesla is one of the, what do they call it, the Magnificent Seven that prop up the entire S&P and NASDAQ. And so if whatever Tesla does and Apple does and all these giant tech stocks do, it influences the indexes massively. So yeah, and we're looking at C3 AI here. I've got a long position on this one, obviously, as you probably would yourself, coming down to a 200 exponential and hopefully finding a bounce, an anemic bounce, not a new all-time high, but it should be a relatively decent bounce. And yesterday, to be fair, it was an okay bounce. I took this position when we hit that and so far it was up about 10% from that. It's just a little less than that now. So there is opportunity in traditional markets. Now oil still being a bit of a concern, moving back up above the Bollinger Band centre here, probably with a view to go back up to $83 a barrel. We don't want to see that, but we probably will. And look, a classic pullback into a 200 exponential and simple, forming a golden cross. We also had a golden cross on the simple moving averages. So it does look like we are going back up to 83. And the big concern would be, do we break above 83? Because if we do trend up towards 93. It's pretty much that simple, really. This is a bullish chart. We should expect it to continue being bullish, and a breakout really is the thing that we're most afraid of. And that would cause consolidation in all markets as CPI would rise, inflation would continue to rise, and it will get priced into everything. And the Fed will have to adjust their monetary policy accordingly, really. That's in the pipeline. That's not immediate. So finally, before we look at Bitcoin, gold still rearing its head above all major moving averages on the daily. No pump signal, no nothing like that. We're not above the 0 point either on the MACD, so not really super bullish, but showing some form of strength and potential recovery, really. We could do a consolidation trend line here, and we'd be looking to see a breakout of around 1950 to have continuation. Other than that, probably a rejection around here and coming back down towards the lower 1900s. Right, so let's have a think about Bitcoin then, shall we? So yesterday was obviously a good move for S&P and Nasdaq. We saw all that, but also we had the grayscale announcement of the spot ETF, and that caused the mega pump for crypto. Basically driven by Bitcoin. All other altcoins moved through association, some more, some less, but for the most part, Bitcoin doubled its impact. And all the other altcoins basically lagged. So the main trade would have been for Bitcoin. So looking at where we are right now, what I was saying on the Patreon live stream last night is that, yeah, I would expect to see us fizzle out around 28,500. We haven't quite reached that yet. We actually hit the 50 exponential moving average on the daily with a clean rejection there, and the 200 simple moving average on the 4 hourly, so two very strong resistances, and basically tagged it perfectly. So it's not the worst thing in the world because we didn't dump, we just pulled back from that. And if we zoom in to see what happened today, we've come quite close to the 21 exponential, the Bollinger Band Center, and if we can hold above there, which currently sits around 27,237, we actually do have a decent chance of continuing up. Now, I've been saying, and I put it on Twitter, about how I expect more upside than downside from this level. It's not that I predicted a spot ETF or anything, but I said it's more likely to go up than it is to go down. And the top target for me would have been 28,500. So we front run that ever so slightly. We might still hit that. And obviously, if we break that, then that's great. We probably will see a really big move, maybe even up to a new local high. But until then, the original analysis still applies. I'll be looking for just nothing more than a lower high to form on this chart if it hasn't already, and then come back down, maybe to where we started from, maybe a new lower low. Sounds a bit pessimistic, but I mean, that's the analysis that I've said for the last couple of weeks. It's still the same now. You know, I predicted an upside and then basically a downside. So we've got the upside now. We want to see if we get rejected around these levels. Shorting around here is obviously something you could think about doing. Tight stop losses, obviously, because if we do break this area here, it probably will rocket up massively up into and above the $30,000 zone. So just be careful, obviously, if that's something you do want to try. Make sure that you've got your tight stop losses in on that one. There's not really a great deal of point looking at individual altcoins, really. So for the most part, they all basically followed Bitcoin. The only real, I suppose, major treat chart that we saw was the Tomo chart, which actually hit all major targets. So that was a bit of an anomaly, but we caught it on the channel. We made a video about this a few days ago. We basically hit the top target, making that full 30% move. So there are sometimes going to be some altcoins that can, well, do their own thing or yield better gains than Bitcoin based on their own charts and individual merits. But for the most part, the market's trending in the shadow of Bitcoin, and Bitcoin is doing this and has already hit this area, and this is all, like I say, exactly as predicted. So we'll be looking for it to probably come down more than go up. So we've done our nice big move up now. maybe a little further to run, and then back down, and hopefully we double bottom, something along those lines. But given with what I said about Dixie probably wanted to go up, oil also wanted to go up, head and shoulders forming with further downside on S&P, we can't get too over optimistic about further highs from here. We might as well just stick with the original analysis, which is a new pump into a lower high and see where we go from there. Again, when you look at these charts on dailies like I do, for the most part, day to day, the analysis more or less stays the same. The hopium exists above 27,200. Breaking down below there or closing down below there on a daily will most likely have continuation down to our previous lows, and maybe even as far down as 24,400. But until then, shorts exist at this level, longs exist at this level, and we'll see which way he wants to give. Traditional markets are going to help us, hopefully, with their either strength or weakness. Do we have continuation on the S&P, or do we get rejected with the head and shoulders pattern? So we'll see. We'll sit back and watch and wait. It's been a decent couple of days of trading, definitely. Now we want to see if we've got follow through if this run and this rally has any legs. Right, I'll leave it with you there. There's not much more to say about it than that. If you've got individual altcoins you want me to have a look at, join the Patreon. You can leave comments in the description as well if you want me to look at something. If it's worth talking about, if there's something to say about the chart, I'll make a video on it. Otherwise, we'll just leave it. Right, thanks for watching. Hope you have a nice day. Take it easy.